Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our stock Thursday buys here on the 18th of February 2021. We're going to go ahead and quickly take a look at stock futures over the past, right now kind of going into Thursday. Then we're going to go ahead and take a look at the past week. There have been a few negative days here in the market. And then we're going to go ahead and jump over into the M1 Finance app. What I'm planning on doing today is selling out of two positions, and I'm going to be adding a brand new position into the M1 Finance portfolio, and we're going to go ahead and do our last scheduled deposit of our cash, and we're no longer going to be funding this account going forward on M1 Finance. We're going to go ahead and continue moving forward funding over at Fidelity in the future. But I do want to go ahead and cover a few stocks that I've been taking a look at here recently and kind of go over why I'm buying the stock that I'm choosing to buy today. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now the last few days I posted a post over on my Facebook page on Financial Investor 101. Now this went over 5 different companies, ticker symbol MEI, the Methody, Electronics, we had Docs, this Amdocs, Oracle for Oracle or ORCL for Oracle, CSCO for Cisco Systems, and Intel, INTC. Now I had looked over all of these and they all had pretty good valuations as far as they had growing earnings, growing potential, but they were all pretty high priced. But their price does make sense for where their earnings has been going, from where their net income, their revenue, where their price to sales, their price to earnings, and their future growth are projected. So all 5 of these companies are in really good positions for future growth. But buying right now, they're all pretty high, but what I'm expecting in the future, in the next 5-10 years, as this portfolio continues to compound, is that these positions will just continue to move higher in the future. They may be high here in the short term, but high is a relative value to now versus where it's going to be at in the future. Now, taking a look at this past week, we're going into Thursday. Now, stock futures are currently negative, as we see here. We can hit refresh, and stock futures go ahead and load. Looks like that one had popped up just slightly to the upside, but it's still negative there. But we've had a negative Tuesday, down 0.06, and a negative Wednesday, down 0.03%. You can see there was a big dip here on Wednesday at open, and then we had an upside trend there towards the end of the day, kind of keeping it flat for the day. So it's consolidating right now. We had a flat day on Wednesday last week. We had a couple positive days on Thursday and Friday, and then we had a flat day here on Tuesday and Wednesday. To me, it just looks like the market's sort of consolidating, and it's making a decision right now overall. Is it going to move higher? Is it going to move lower? The Dow Jones actually has had a couple positive days, so S&P, a couple negative days, are essentially flat, whereas the Dow Jones has been pretty positive, and the NASDAQ here, we can see, has had the least or the most downside potential. Tuesday down 0.34, Wednesday down 0.58%, and they actually took a bigger dip there on Wednesday and didn't quite recover. So you can see here at the bottom, I believe they were down over 1%. You can see they had a nice rebound here, but that only made them close down 0.58%. Now jumping over to the M1 Finance site, we're going to go ahead and take a look over the portfolio. I didn't do my Tuesday video or my Tuesday video this past week. I was kind of undecided on what stocks I wanted to buy, what stocks I wanted to kind of sell out of my portfolio. So I did post a screenshot over on Facebook of the performance for the past week. So I did post this here. So last week we had a change of 0.9%, which is pretty positive, versus the indexes. I think were I believe they were flat or so. So we're kind of in the money now, and we're not going to be funding this one any longer. So we have $30,000 working for us. Plus we're going to go ahead and sell out of 2 positions, and we're going to take our cash balance and the equity from those 2 positions to buy into a new company. So over the past overall, we can see we're up 53%, or a little over $7,200. And a lot of this has to do with Eaton Vance, Apple, Lowe's, Main Street Capital, and so on. We still have some pretty good losers down here at the bottom with Simon Property Group, Waco, and Altria. So we have a real estate investment trust with the malls. So it's Simon Malls. We have Waco Group, which is a retailer which sells shoes and other apparel. Altria, which is that tobacco and such. And we have a utilities down here as well. So really, we only have a few positions that are in the negative within the portfolio. And let's go ahead and take a look at what companies we're actually planning on buying today. So I do have a couple of these punched in here into my Y charts. And we're going to go ahead and kick off by taking a look at ticker symbol MEI. Now, we'll go ahead and take a look at where they're at right now within the year, just really quickly where they're at. So over the past year, let's go ahead and punch in percentages. All these are pretty high at the moment. So here, over the past year, MEI is up 14.13%. If we look at docs, this is up 6.78%. Oracle is up 11.93%. Cisco down 1.53%. And Intel is down 8.06% over the past year. Now, as far as their financial metrics, this is this part where I kind of want to go into these companies. So ticker symbol MEI, let's take a look at revenue, net income, free cash flow, and earnings per share for the trailing 12 months. And let's take a look over the past 10 years. Where are these companies where have they been and where are they going? So taking a look here at MEI, we can see here that revenue is in the blue. Revenue is in purple, so it's 130%, so that's roughly 13% increase on average per year. In the orange, we have their net income up 569, or roughly 56% on average per year over the past several years. Looks like this starts a little bit before 2012, so we don't go back the full 10 years. This is about 8.5 years or so of data. Then we have cash flow in the blue. So blue, that's what's kind of throwing this chart off. If I remove that, we can kind of see how its net income and earnings per share has been pretty much in line there. So they're usually very similar there. And then their earnings per share. So earnings per share in the blue line up 528% over the past 8.5 years, and it's continued to uptrend right here. We did have a bit of a stall out period in 2018, but here during 2020, last quarter, a little bit of a stall out, but looks like it's trending upwards again, and that's why that price is kind of moving here, to the positive. Now next we have ticker symbol DOX. This one, let's take a look at the revenue, up 36%. So that's not too high. That's 3.6% on average per year for the revenue. But what we want to focus on is their net income, which is up 9.2% on average per year, or 92% over the past 10 years. Then we have in the blue, free cash flow at 54%, and earnings per share up 103%, or 10.3% on average. Taking a look at Oracle, again, let's just go ahead and focus on, I guess we'll kind of continue to focus on them. But revenue, 14.7%. Not a lot of growth there in their revenue, up 1.4% on average per year. Their net income in the orange, 3.4% on average. In the blue, we have free cash flow, 27%. And in the green, we have their earnings per share. So that is up nicely. Oracle doesn't seem to be a big price change. It's pretty consistent. Let's go ahead and punch in their price in there. And we can see price is the orange now. So it's up 88% over the past 10 years. Whereas let's go look at MEI. This is purple. It's up 218%. Docs is 162%. Let's go ahead and take a look at Cisco. So Cisco is up 147% over the past 10 years. It's revenue in orange of 12%, so not a lot of revenue, but it's a hardware and services company. So this one focuses on trying to grow their net income. I have noticed here recently that their net income and earnings have been slowly growing, but they're still working on that. And their earnings per share here is up 106% over the past 10 years, or 10.6% on average per year. And then we have Intel here, up 181% for their price over the past 10 years. In green, we have their cash flow, 117. Purple, earnings per share, up 115 or 11.5% on average. Net income, 7.1% on average, and revenue, 6.8% on average. So all of these companies are moving in a very nice direction, but only a few of them, when I was taking a look at them, were companies that I had kind of wanted to focus more on. One of them here, let's go ahead and remove return on invested capital, change it back to normal. So let's go ahead and just take a look at all of these and just take a look at them all. So Cisco 19.31, Intel 18.28, Amdocs 16.29, we have Oracle at 13.69, and we have Method at 11.8%. So pretty good, everything's over 10% there for the return on invested capital. Now, the two that I really wanted to kind of focus on, let's go ahead and take a look at, I wanted to focus on MEI and DOX. So here, MEI has total assets of 1.37 billion and liabilities of 587 billion. So that's a really good ratio between assets and liabilities. Now the other ratio I wanted to take a look at was long-term debt and cash and equivalents. So here we can see that their long-term debt is $352 million, whereas their cash and equivalents is $217 million. So here they were doing really well here up until going into 2018, and then their cash and equivalents dropped, and it looks like they're starting to recover again. I'm not sure if maybe this is some sort of an acquisition, or maybe they use their cash for something here, but they've taken on a ton of debt here after 2018. Looks like maybe second or third quarter, they have just taken on a ton of debt, and that could just be growth within the company. Maybe they bought something here that they had to use, they took on a total of debt there. So that would require a little bit more investigation. Now, the other company I want to take a look at was Amdocs, DOC. So here we can take a look at their long-term debt is $744 million, but they have cash and equivalents of $983 million. So they have much more cash on hand, and they could pay off their debts if they wanted to. It looks like they're kind of keeping it in line, so their debt grows, but their cash and equivalents has also grown with it as well. And the other one we wanted to go ahead and take a look at was assets and liabilities. So here we have assets of $6.3 billion and total liabilities of $2.6 billion. So the ratio for Amdocs is a little bit better. Earnings, and we take a look here. Earnings per share actual, earnings per share surprise. So yeah, MEI came in here with a 25-cent earnings surprise and revenue surprise of 24 million versus Docs with a 9.91 million and earnings per share surprise of 2 cents. So I mean, I was looking at these two and it was really hard to decide, which one over the other. And I think there's much more growth potential with MEI, with a smaller business still working its way up, still growing. Again, with all of its financial metrics, we already saw that its net income, revenue, free cash flow had grown in the triple digits over the past 10 years. But I think that growth can continue to move, grow forward in the future. So I am at this time am deciding to go with ticker symbol MEI, and I did look over a ton of their products that they do produce. So I went onto their website. They do have a ton of different products that they help design, manufacture, and work through. So they have different products within the automotive area, power products, data products, sensor and switches. So they're located in a ton of different products that are available out there. So I don't believe that this company will have any issues as far as manufacture or producing products, and their numbers kind of speak for themselves. What we're going to go ahead and do is jump over to M1 Finance, and let's go ahead and sell out of the companies that I do want to sell out of here in the short term. So right now I want to sell out of Kellogg's. I don't believe that Kellogg's here in the short term is offering the best bang for my buck. So what I want to do is go ahead and go into Kellogg's, sell. I'm going to go ahead and place a $500 sell here on Kellogg's. Now I am selling Kellogg's in the green. If I go ahead and take a look at my chart here, Kellogg's, actually it may be red here in the short term. It was green because of those dividends, so it looked green. Yeah, but it's down $3.87. But because of those dividends that I've made over the time that I've held the company, I'm actually positive by 33 bucks. So I still think it's I feel like Kellogg's isn't really going anywhere. I had looked into its financials in the past, and it just feels like it's a little bit dead weight for the portfolio, where I want to focus on a little bit more growth while still getting those dividends. So that was one I wanted to go ahead and remove from the portfolio. The other one I wanted to go ahead and remove was, let's go ahead and see, whoops, not McDonald's. I don't think it was McDonald's. Thought I had another one in mind. Oh, Genuine Parts. That is it. GPC. I own this one over on Merrill Edge as well. And, I just feel like there's a better bang for my buck right here. So I'm going to go ahead and sell out of this one as well. And we're going to go ahead and punch in that. We're going to go ahead and sell $400 worth of it, but we don't have $400. We just have the $338. And we're going to go ahead and head back to our portfolio. We're going to go ahead and hit edit. And we're going to go ahead and add. Ticker symbol MEI. And we're going to go ahead and take a look here that this is the correct one. Add to my basket, add it. We're going to go ahead and give it a single percentage. And what are we at right now? 101. Let's go ahead and remove this one down to 1 and save this. Now, are you sure you want to make any changes to your portfolio? Any slices that were removed will be sold during your next trade window. I didn't remove any slices. What you want to do when selling is first sell the equity out of the holdings that you no longer want to hold. Once all the equity has been removed, then edit and remove those companies from your portfolio. Otherwise, if you remove them from your portfolio, the equity that you get from those companies will automatically be triggered to invest into your total portfolio. So I didn't want that to happen. Now, we're going to go ahead and sort this by value. We're going to go ahead and punch in here. And we currently have available for order, $1,000 here available for order. So I'm not going to be adding $1,000 at a time into this company at this time. What I'm going to do instead is go ahead and let's go with 700. We'll stick with 500 for now. I do want to be able to dollar cost average into this company in the future. I don't believe it's going to move, I don't think it's going to continue moving higher here in the short term. I think there is going to be some volatility. Here we can see that today it was down 1.42%. So what if in the future I get another 3%, another 5%, another 10% discount as this company bounces between those 52-week highs of, where was it? Let's go back to our summary. We have a 52-week high of 43.11 and a 52-week low of 21.46. It's trading at 39.01. So only $4 to the upside and a little over, $15 to the downside. I would really like this one to kind of move lower here in the short term, and then I could buy up more shares with that extra $500. So let me know down in the comment section below, what do you think of Method? Have you ever heard of this company? Looking over their their website. I kind of took a look at some of their products that they make. We went over their financials together. Let me know down in the comment section below if you had the choice of investing in a few of these. Maybe you actually own Intel, Cisco, Oracle. Maybe these ones are new to you. I haven't really heard of them in the past, but I had looked into each of them just because they had never really stood out to me. And a lot of the times, those are sort of the special ones that do really well in the market. So that is going to be it from me in this video. Let me know down in the comment section how your week has been, what stocks you're planning on buying or selling, and of course, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye.